Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Financial markets are taking more notice of the lackluster US economic data today, with Wall Street equity markets hesitating, bond yields in a defensive twist, and the US dollar staying weaker. But first, the overnight dairy pulse auction not only confirmed the prior week's sharp rises, it added to them. Whole milk powder was up a marginal 0.4% from a week ago to be up 14% from the start of 2026. Butter was up 6.8% from last week, up 18% year to date. And the skim milk powder price was up 1.7% from last week, also up 14% so far this year. Everyone in the industry will welcome this confirmation of the recent rising trend, even if some of it is just US dollar weakness. Not so positive was the US retail sales report for December, which showed zero growth from November to remain 2.3% higher than a year ago. Given CPI inflation is 2.7%, there is clear stagflation involved here. Meanwhile, the weekly ADP employment report only showed private payrolls gaining 6,500 nationally, well within the margin of error. But at least it was better than the prior week's no change. The January NFIB Optimism Index was also little changed and still below the benchmark 100 level. US household debt at the end of 2025 was recorded at $18.8 trillion, a 4.2% rise from the end of 2024. Non-housing debt only rose 2.6% in the same period, so Americans are taking on more housing debt at a faster pace. The same report shows delinquency rates on all loans rose to 4.8% of outstanding household debt, the highest level since 2017, driven by higher defaults amongst low-income and young borrowers. The overall soft US data probably helps make the case for another Fed rate cut at their next meeting on March the 19th, New Zealand time, but there's a lot to be revealed before then. In Australia, consumer sentiment slipped in February, and not insignificantly. Recall the RBA has recently pushed through a rate rise. Analysts say the fall is a muted response compared to previous rate hikes. Over 80% of those surveyed expect interest rates to rise further in the next 12 months. Home buyer sentiment has sunk as price expectations hit a new 15-year high. Meanwhile, the NAB Business Sentiment Survey in Australia inched up in January, although revenues softened. That was offset by costs easing a bit faster. The US Treasury 10-year yield is now just under 4.15% and down a sharpish 5 basis points from yesterday. And the price of gold will start today down $55 from yesterday at $5,018 an ounce. Silver is down a sharp $3 at $80.50 an ounce and continuing its extreme volatility. American oil prices are down 50 cents at just on $64 a barrel, while the international Brent price is now just under $69 a barrel. And the Kiwi dollar is little changed against the US dollar from yesterday, still just under 60.5 US cents. Against the Aussie, we're up 20 basis points at 85.5 Australian cents. Against the euro, we're holding at 50.8 euro cents. That all means our trade-weighted index starts today unchanged at 63.9. And the Bitcoin price starts today at $69,517 and down 0.7% from yesterday. Volatility over the past 24 hours, though, has been moderate. It is on plus or minus 2.3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.